Welcome back, everyone, to Your Personal Real Estate. Now, we have Saji Salam. Now, you've seen him before. He is one of our show sponsors. He's a principal at Caregivers Capital. How are you doing today?
Oh, very good. Thank you for having me, Michelle.
It's glad to have you back. Now, please tell us about you and why you began Caregivers Capital.
My background actually is in management consulting. I was with firms like Accenture and Deloitte, consulting for Fortune 500 companies. And when the travel got to me, that's when I started to look at other avenues such as investment management and commercial real estate. And that's what got me started in CareVentures Capital. CareVentures Capital is a private equity firm based out of Houston, and we invest in commercial real estate. We have about 100 million assets under management across 5 states in the country, most of which is apartments. Right here in Houston, we manage about 750 units.
Right. And one of the things, just like we did with Courtney, we want to deep dive into different aspects of CareVenture Capital. Let's start within the basics of real estate investing for passive income. How to get started and what to consider. Is this thing, is this a kind of a thing for everyone?
Well, it is a broad topic in terms of real estate, because real estate itself is a broad range, going all the way from a single family home all the way to apartments, industrial storage, self-storage. So there is a whole gamut of opportunities in real estate. And depending on what your interest is, what your expertise is that you want to build, you may want to focus on one or many segments within the real estate space. So at one end, we look at it, we have the opportunities right there in land itself. There are folks who buy land, develop land, and then sell them to other developers or other farmers, so, or resorts. So there is opportunities right there in terms of purchasing land and doing the real estate side of it. You could go one step further by single family homes. And even in single family homes, you want to buy them and rent them out. It's not just monolithic. You could do a short-term rental, you could do a mid-term rental, or a long-term rental. A long-term rental is what most of us are familiar with. You buy a rental property, you lease it out to a family or a group of people living together, and typically there are contracts of 12 or 18 months. So that's why they're called long-term contracts. Then you have mid-term contracts. These are mostly for traveling nurses, other professionals who travel for projects. Maybe they come to a city, stay there for 2-3 months. So that is the midterm rental side of the business. And then many of you are familiar with Airbnb, and in the real estate world, we call them short-term rentals. So anywhere from a week or 2. So that is what, and sometimes even up to a month, is what the short-term rental space looks like. So that is kind of where we are dealing with the single family side of things. And then you have apartments, which is where bulk of our investment is. So we buy large apartments, mostly 100+ units. So that is another area where one could invest in.
Now, is this kind of thing for everyone, or how would someone get started?
Well, yeah, if you ask me, anyone can get started in real estate. And you just need to be careful in terms of how you want to get started and what segment you want to get started. So in any of these segments, you need to develop some experience and before you jump right in. So it might be good to talk to people who have done work in that area. So if you're planning to go into land investments, find people who have done land investments before, talk to them. If you are looking at single family, same thing. Talk to people who have done single family rentals, understand the dynamics, and then go for it. And the same thing would apply to multifamily too, or industrial or self-storage. You need to find the right people who've been working in this space, and then go from there. So that would be the best approach to take. And depending on what asset class you're going into, you would need to, the level of education required may be much more or less depending on the asset class.
Right. Now, what should one consider to invest in real estate for passive income?
Passive income is basically money working for you while you're sleeping. That's kind of the simplest definition of passive income. Like I mentioned earlier, all these assets can create passive income for you. Your rental property, I have a few in the Midwest, my personal rentals, which cash flow anywhere between $300 to $800 a month. So that is passive income right there from having investments in single family. I also invest as a limited partner or or a real estate investor in other apartments run by other deal sponsors as a passive investor. So I collect income from those properties which are sent to me to my bank, and I don't do any work. So that is another example of passive income. So there are many ways to generate passive income in the real estate space, and like I said before, it's good to understand that space you are getting into by talking to a lot of people. And nowadays there's a lot of content on TV, on social media, so read up, talk to people before you start investing.
Yes, there is. Now, is there any other aspect of CareVenture Capital that someone could reach out to you about?
Absolutely. We are focused on investment management, and many of our investors are physicians and other high net worth individuals who have very busy day jobs and lives, and they don't have the time to put into analyzing each of these deals, operating these assets. They just want to invest with us and make sure that we deliver the passive income that we promise them.
Great. If someone wants to be a part of CareVenture Capital, what would be the first step for them?
Like I said, reach out to us, but for us it's always education, 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 because we need to get our investors educated about the risks, the good, bad, and the ugly of any asset class before we feel comfortable that they can invest. So that is the primary area of focus for us as one reaches out to us. There are different types of investors who come to us. There are what you call accredited investors, who are investors with 1 million net worth and or have $200K in annual income or $300K in annual income if it's a family. So those are the accredited investors. They are much more sophisticated. They have had experience investing in other asset types. So that's one class of investors. The other class of investors are called non-accredited investors. And there are rules and regulations in terms of who and how we can reach out to accredited versus non-accredited investors.
Thank you for being with us today, Saji. And we'll be right back after this commercial break.